Okay. The swap zone equal to S&D flips, yes. Which is the same concept as the support become resistance and also resistance becomes supports. Okay, what is the difference between RBR, DBD, and RBD, DBR? Okay, RBR is a continuations. Okay, there are four things. Okay, there are four things in the supply and demand basis. Okay, the first one is the RBR. Okay, RBR is the continuations. Continuations means you didn't against the trend. Okay, means you didn't against the trend. This is actually happens in the uptrends. And when the price retest to the base on this level, you can try to buy. Okay, it's for the continuations. We write the trend. Okay, but DBR, okay, DBR is different. Okay, DBR is different when the price is coming down and suddenly we got a sideways and breakouts. Okay, and breakouts. So you have to wait for the pullbacks and buy. Okay, this is for reversal. That is different. Okay, RBR is slightly low risk, which we write the trend lah. But reversal is against the trend. Again, this one is the high risk. Okay, against the trend. So this is a high risk. Okay, for the supply is the same. That one is demand here. For supply is the same. If it's drop, base drops, okay, drop, base drop is low risk because we write the trend. We just have to wait the pullbacks, and this can be entry. Okay, if for the rally base drops, okay, when the price suddenly comes down in an uptrend, so you're gonna trade for the reversal. Okay, you're gonna trade for the reversal. This one is reversal, and that one is the entry. Okay, it's different thing. So this one will be high risk, and this one will be low risk. Okay, there is a difference between RBR, DBD, and also RBD for and DBR. Okay, how to identify? Okay, one by one here. How to identify strong rejection zone? Okay, strong rejection zone. This one I don't get what you mean. How to identify strong rejection? Is it? Okay, do you mean how to identify strong rejections? If it is strong rejection, how can you identify? Okay, actually the rejection you can identify by the candlestick wick. Okay, the candlesticks. This is the candlesticks, and this is the wicks. Okay, the longer the wick. Okay, the longer the wick, the stronger the rejection. Okay, the longer the wick, the stronger the rejection. Just have to understand how can this candlestick be forming. Okay, how can this candlestick form? Okay, for example, for you, okay, for example, okay, for example only. Okay, how can you know there is a swaps? There is a strong rejection. Okay, strong rejection from the sellers in the buy zones or strong rejection from buyers. Okay, for example, right here, I get you an example. Yeah, if you want to buy, okay, for example, let me show you on the rejections here. Okay, so for here you got the resistance zone. Okay, for right here you got the resistance zone. How can you know there is a strong rejections? Okay, how can you know it's strong rejections? Okay, this is a strong rejections. This is also strong rejections. This is also the strong rejection, but not this. Okay, not this, not this. Why? It's because of the long wicks than the bodies. Okay, the longer the wicks, the shorter the bodies, the stronger the rejection. Okay, so for me, this one is a strong rejections. Okay, because it got the longer wick and shorter bodies. This is a very good seller's indication. Okay, this is a very good seller's indication. For example, this one is also a good rejection for the zones. Okay, from the zones, it's also a good rejection. So if you want to sell in the seller zones, okay, this is, for example, this one is your sell zone. And if forming this type of candlestick that close as bearish, that means the sellers have been in. But how if it close in bullish? That means that it's not strong enough. Okay, when you want to sell, you always wait for the rejection of bearish first. Okay, When you want to buy, you have to wait for the rejection for bullish. Okay, depends on the wick and also the body. The wick must be longer than the body. The longer the wick, the stronger the rejections. Okay. So we have to wait for the candle to form. Yes, have to wait for the candle to close first. Okay, if the candles haven't closed, you cannot decide. Okay, cannot decide. They need to break the structures for the zone to be valid, right? Have to break the zone, have to break the supply or demand zone. For example, right here. Okay, this is an example. For example, is this one. I'll show you this. Okay, I show you this one is a drop based drop here. Okay, this one is a drop based drop, very clear. Okay, drop base drops, right? So we mark the last bullish candlestick before the drops. Okay, this one is the DBD. Okay, after the candlestick breakouts, okay, after the candlestick breakouts, it comes back to retest on this zone. Okay, this time you cannot entry first. You cannot entry first. You have to wait for the rejections. Okay, this one is still the bearish rejection, so not the confirmation we are looking for. Another candlestick coming out, this is the rejections. Okay, this is the bullish, which is the buyer hint. Okay, this is the buyer's hint. For me, I will entry buy at these candles because the buyers has been coming in. So this is how can we identify and use swap zones to trade for the more lower risk side. Okay, for me it's lower risk because we know clearly about the directions. Okay, once it break out the supply or break out the demand zones. Okay. What are your entry triggers when the price retests the zone? Okay, my entry triggers based on the smaller time frame because right now we only explain on the weekly. Okay, only explain on the weekly. Okay, only explain on the weekly. This is for direction purpose only. Okay, for me weekly, I just mark the zone. Okay, I just mark the zone and also know the direction only that. For right now, we know that gold is on the buy. And these are two possible places that we're going to retest. Okay, so we have to wait for the buy, then we go to daily. Then we go to daily, you see on the price action on the daily. Okay, you see on the price action in the daily and also the structures. Okay, for the structures right now, you can't see anything. Okay, you can't see anything. Okay, since it's in the buy zone, okay, since it's in the buy zone, we are more focused on buying, right? But you can see that the price is break a new high and break a new low. Okay, it's breaking the new low right here. This is the previous low, and it break out already and form the new lower low. Okay, this is not the structures we are looking for to buy. Okay, if you want to buy, make sure the price is break new high, break new high, break new high, right? It's not breaking new lower. You have to clear about market structures. You have to clear about market structures first. Okay, since it's still breaking the new lower low, but it is in the buy zone of weekly, right? It's in the buy zone in weekly. So what we have, we should wait is for the structures to break out. Okay, what we should wait right now is to wait for the structures to break out. This one. Okay, break out the previous low, previous lower high, and then pullbacks, and we get a buy. Okay, if it didn't break out and break another low, then we know that daily is still downtrend. So high possibilities, okay, high possibilities, it come to these buy zones. Okay, so got two possibilities. If we break out the previous high, which is somewhere this area, okay, if we break out, then we wait for the pullbacks to buy. Okay, but if we break out the previous low, we just wait for the pullbacks and sell. Okay, this is the what I see is the decisions. Okay, this is a decision point for gold right now. Okay, from daily. From daily, you can know that it's a decision point that are coming in coming weeks. Okay, in coming weeks that you know. Okay, so in daily, what we should see is the market structures in the weekly zone. Okay, in daily, what we should see is the market structures in the weekly zone. If we're still making the good move, which is the uptrend structures following the weekly directions, then we can follow the weekly direction to find for buy. Okay, if we're making the new lower low like this go, then you have to be aware the weekly might be retracing until the next zones. Okay, the daily must be retracing until the next zone. This is what I do in daily. Understand? Any question? Stop loss, how many pips for this case? Okay, for this case, yeah. For this case, haven't until the stop loss. I always decide the stop loss if we have confirmations. Okay, does that mean we need to wait for it to break and retest first before buying? Yes. For the low risk, yes. In marking the high and low, what will be considered the body of the wick? Okay, the wick. I will prefer it break the wick to confirm. Risk and how many candles do you need to take? Only one. Only one. Only one. Okay, how can I draw the supply and demand zones? Okay, I show you just now is the last candlesticks. You can see this one is the last candlesticks before the rally. And this one is the last candlestick before the drops. Any more questions? Okay, any more questions? Okay, so for the directions, I'll be using weekly and daily purpose. Okay, purposely for direction only, for directions. Okay, after we go to finish the directions, we know the directions, and then you can go to H4 or H1 for zoning or setups. So now for the goal, no direction yet. For the intradays, yes, no direction yet. But for the long term, for the swing traders, it's still the uptrends. How long before you became a profitable traders? This one around 2 years, 2 years to 3 years. Let's say in H1 hour time frame, there is a base with fast candle. Does that mean I will use the 5 candle high and low? What do you mean? There's a base with 5 candles. It doesn't matter on the high and low. You have to break out the demand or supply zones. Okay, so let's say we got the zone already, right? We have to wait for the breakout, which is the candlesticks. One candlestick, the body has been closed outside of the demand or supply zone. You get what I mean? I mean for the SND base, yes. The 5th candles, why? Why you need to use the 5th candle? I don't get what you mean. I mean the last. Yeah, I give you the example right here. Okay, it's very easy. You got 5 candles. It doesn't matter how many candles you have. Okay, you just have to know that it's a drop. Okay, this one is a drop, right? This is a drop. And then the bullish right here and another bearish that break out the previous support, right? It has shown the breakout of the previous support. So just mark the last bullish candlestick here. Bullish candlestick before the drops. Okay, just mark the last bullish candlestick before the drops. New replies. See your flower need hang how much per weeks? What do you mean? How you decide where do you put your TP? We mark all the candle bullish or just body all. For supply and demand zones, you have to mark all. Okay, you have to mark all of the bodies, all of the week to the week. How you decide where to put your TPs based on the structures? How the RBR or daily time frame? What is the rejection RBR's rejections? How the RBR on daily time frame? Okay, on daily time frame, yeah. For me, I only mark on the weekly time frame for now. Okay, for now lah. If the daily time frame got the reactions that are making new RBR, okay, which for example is making something like this. It's making a new RBR. Okay, ready base ready. Okay, it's making a new ready base ready. If it got new ready base ready, that I would definitely take a new RBR, which is the demand zones for me to entry. Okay, for me to entry already in this RBR. If it got lah, okay, if it got lah. But right now you don't have. Okay, for example, right here. Okay, for example, this one here. For example, this one is the I have to give you examples. Okay. Okay. For example, this one is the this is a zone in weekly. Okay, in weekly, this one is the zone. But after it touches, okay, after it touched our weekly zone, it formed the new drop. Okay, this is the drops base ready. Okay, drop base ready. So I mark this new base. Okay, the new demand zone. The new demand zone right here. I will just mark it and wait for the confirmations and buy in this zone. These are examples. We have to depend whether it got already make a new zone or not. If this trend break and retest, where should we take the set of TP and SL? The TP will be a previous high. Your SL will be depends on the risk also. So you have to below the higher low if you're buying. Structures, can you explain more detailed structures? Okay. Okay, on the structures, okay, I will explain to you more details of the, maybe I go to another there. Okay, structures, you have to know that what is uptrend and downtrend first. Structures is very easy. Uptrend should got this. Okay, wait, should got this one. Okay, a downtrend should got this one. That's all you have to know. Okay, that's all you have to know, but it is not that as simple as that. Okay, uptrend should start from the low to the high, and when it retraces, when it retraces, it's failed to break the previous high, a previous low. Okay, it's failed to break previous low. And it's able to break out, previous high, and this is the uptrend. That's why you always see that the uptrend should start from low to high and a higher low and a higher high. Okay, this is the uptrend market structures. For downtrend, it's exactly the same, just opposite only. It start from the high to the low, from lower high to lower low, and this is the downtrends. Okay, it might consist of these two elements, which we call that as able to break out previous low, able, but fail to break out previous high. Okay, this is structures. These are structures for uptrend and downtrend. Okay, for this example in gold, let me show you again. Okay, for this example in gold right now, it's on the weekly zone. Okay, it's on the weekly zone, but it is breaking. Okay, it's already break. It's already break. This one is the previous low. Okay, this is the previous lower low, and it break this lower low and create another lower low. So this is not the reaction we are looking for a buy, right? If you want to buy, make sure it's got the uptrend market structures. Okay, it got the uptrend market structures first. So we are waiting for it to create another high. Okay, create another high and pullbacks and we buy. Okay, have to break out the previous high first. Have to break out the previous high to form the higher high. so that we got the uptrend market structures and we can focus on buy. This is all for directions. Okay, this is all for directions. In the buyer zone after we test on the drop base ready, do we need to wait for the bullish candles after the rejections? As long as the rejections show the bullish, okay, if the rejections in the buy zone, yeah, okay, if the rejection from the buy zone show that it closed as a bullish candles, that means the buyers are in. If you want to buy, you wait for the bearish candlestick rejection, then not valid. Okay, do we take into consideration for the shadows when we identify a market structures? Yes, I would take it as take the shadow in case there are any like fake breakouts or something. Okay, just take the shadows. Just take the shadows to mark the structures. Then show me S&D zoning on different time frame. Okay, can. Okay, I will show you in, we proceed to H4 zoning. Okay, we proceed to H4 zoning. I will clear all this zone first. I will clear this, the daily one. Okay, so I will show you in H4 how can you mark like the rally, base rally, drop, base drops. Okay, for example, right here you can see, okay, from this side, it's more examples. Okay, it's more examples you can see. Okay, this one is what we call that is a drop base drops. Okay, this is what we call as a drop base drops. I just take the last candlestick bullish. Okay, last bullish candlestick. You can see these are drops, the base and the drops. So this one is the DBD. Okay, it's very simple. Just take the last bullish candlestick before the drops. Okay, this is the drop base drops. Another one, I'll show you another drop base drop again. Okay, this is another drop base drop you can see. Okay, this is the drops, base drops. All right, or you want to see this already, base drops also can. So for you to know this is a supply zone, just take the last bullish candlestick before the drops. Again, this is how we mark the supply zone. And for the demand zone, let me show you whenever it got, okay, here. Okay, this is the drop base rally. You can see. Drop base rally. Okay, after the coming in, you wait for the bullish candlesticks, guys. You wait for the bullish rejection candlesticks formings, and you can try to entry when this candlestick form. Okay, so this is how we mark the supply and demand zone. Any more questions? Can you show liquidity and how it works, please? Liquidity, I think I will not talking on today. Today I will more to the flow. Okay, the step by steps. Liquidities maybe next topics, or tomorrow I will record the videos about the liquidities. Okay, so for zoning, I will just proceed with H4 first. Okay, for zoning purpose, you can consider to take for the H4 and also H1. Okay, after you know the direction already, direction is buy, right? Okay, so you have to mark all the demand zones, all the available demand zones right here. Okay, for me, the first demand zone in H4, I will take the last, okay, this one. I change another color. Okay, this is the first demand zone, and the second demand zone is where? The second demand zone that is here. This is the swaps. Okay, this is the swap zone. Still remember the swap zone. This is the supply change into the demand zone. Okay, so on these two zoning, I will just marking first, right? Because not small, not that small on these two zones, which is like 60 pips. One is another like 40 pips already. Okay, just marking for you to monitor first for H4 or H1. Okay, just mark the nearest supply or demand zone based on the direction. If the direction is uptrend, you mark the demand zone. If your direction is downtrend, you just mark the supply zone. Okay, it's very clear on H4. Just mark the zone to monitor only. Okay, just mark the zone to monitor only. Can you go demonstrate how you do the entry? Okay, later. So after the zoning, after the zoning H4 or H1, I will go to look for the confirmations. Okay, in terms of confirmation, I will go more to the price actions or the candlestick patterns. Okay, or the candlestick patterns in M30, in M15s. Okay, these two time frames. Okay, these two time frames. So what we should waiting for in H4? We already draw the H4. We already draw the H4, right? We already draw the H4, then we can wait the confirmations in M30. Okay, in M30 right here. Okay, so what we should waiting for the confirmations got three types. Okay, there are three types of confirmation which are currently using. The first confirmations is the engulfings. Engulfings. The second confirmations is the rejections. Okay, the third confirmations is the break of structures. Okay, for engulfing, for example, this is our buy zone, so you have to be a bullish engulfings. A bullish engulfings. Engulfings, what is really important is the body. Is the bodies. For example, the bullish engulfings, I would like to see the bodies. The body has closed above the high. Okay, the body has closed above the high. This is the candlesticks high, low, right? Okay, the body have to close above the high to show that there's very strong bias. Okay, there's very strong bias. The body is the key. The body have to close above the high. Okay, this is for the buy. So for sell, it's exactly the same. The body have to close exactly below the low to show the confirmations of the sellers. Okay, these are one of the confirmations that I'm waiting here. Okay, this is one of the confirmations that I'm waiting for the engulfings, the first one. Okay, the rejection, I think I already explained just now, but never mind, I can explain again also. Okay, for the buy, you can wait for the bullish. Okay, bullish candlesticks. Bullish candlestick that has longer wick than the bodies. Okay, doesn't matter where is the bodies form. Okay, is make sure you have the wick is longer than the bodies. Okay, the wick is longer than the body, that's fine. Have to wait for the bullish, and for the selling, you have to wait for the bearish candlesticks that have the longer wick than the bodies. Okay, longer wick than the bodies, same thing, wick longer than body. This is the third one. Okay, this is the third one. So far, any questions? I might explain on the break of structures first, then I go through the question. Okay, the break of structures. This one is the low risk one. Okay, for these two, is considered as a mid risk. Okay, it's considered as a mid risk. For the break of structures in M30, we'll consider as a low risk already, which is going up, right? If you want to sell, okay, if you want to sell, it's going up, going up, going up, and suddenly it formed the change of characters right here. It got a breakout, so we will sell whenever it pull back to this area. Sell here. This is for sell. And for buy, it's the same. Whenever it drop, and suddenly it break the previous lower high. Okay, and then it pull backs, we will buy here. This is for the break of structures. Okay, these are three types of confirmations I'm using. If you want the deeper deeper explanations, I can explain on the next section. Okay, any question? There's all the flows. Okay, there's all the flows I'm waiting to entries. Can we consider current trend as an inverted head and shoulder? How many confirmation do you need before you enter a trade? For me, you always wait for more than two lah. Okay, the more the better lah. The more the better. Depends lah. If it's engulfing a rejection, do we still need for wait for retest? Okay, actually entry you got two types of entry. One is after the consider. Okay, I will call it as a confirmations entry and confirmation retest entry. Okay, this one you should take the bigger risk. Okay, because sometimes after you form confirmations, okay, the price is already far apart. Okay, it's already far apart, so you have to take a bigger risk. Okay, if you can't wait, you just entry. Okay, if you can't wait, you can entry. But I prefer this one. Okay, confirmations, reject, entry. Okay, confirmation, reject, entry. For example, this is our sell zone, right? After the bearish engulfings. After the bearish engulfings, okay, it closed already at this price, already below, okay, already below the selling zone. I would like to say I prefer the retest to entry. Okay, retest on our selling zone to place entry. This is lower risk. Any more questions? Current trend as inverted head and shoulders. Which time frame you mean? Hey, which time frame you mean? Current trend is inverted head and shoulders. H4, H4 no. H1 also no. Which part you saw inverted head and shoulders? Or daily is it? Daily not yet. Okay, for your informations, if you want to identify on the chart patterns, chart patterns only valid after the breakout of the structures. So the structures is the key. Okay, the structure is the key. Inverted head and shoulders only valid when it break out the neckline. Okay, the neckline right here. After the breakouts, only valid. Okay, for right here, we cannot see is a chart patterns, but it's a sideways of it. Because you can see it making the equal high and equal low. It's still the sideways. Okay, it's still possible it's sideways and drops. Okay, we cannot see any direction from dailies. Do we need a reversal candlestick for retest or just any bearish candlestick? What do you mean to have a reversal candle for retest? Okay, for retest, you don't need to wait for any candlestick forming or anything. You just entry after the confirmation form and retest on the sell zones. Okay, retest on the sell zones, then you can start to entry. Can this strategy use in M5 time frame for scalpings? M5 is not recommended. Okay, I've tried before, the win rate is quite low. You have to apply through multiple time frame, then your win rate will be higher. Okay, how many times of retesting a zone before it's not safe to enter in zone anymore? I would say that it's better for it to instant. Okay, instant retest. Okay, not after retesting on the second time. Second time is higher risk already. Okay, which means we need to do mapping daily. Weekly lah. I would say weekly, daily. Because I prefer on the intraday setups. Okay, weekly then daily. How you control your emotions? Don't use overlord lah. Okay, don't overtrade, then you can control emotions really. Okay, for example, I will talk on the risk management later. Any more questions? If you don't have any questions, okay, I will talk on the money management and also risk control. Okay, if yes, you can just comment yes. What do we need to do for scalpings? Because we are traders. Because we are traders. Okay, if you want to wait until the lowest risk, then you cannot make money every day. So we sometimes have to scalpings. Okay, we have to take the risk for scalpings to get all the money. How about the RRR? Okay, if you don't have any questions, just comment you understand. Okay, you comment you understand, then I will continue on the risk and reward. Okay, comment understand right now, guys. Comment. If you understand, comments. Comment understand first, guys. Comment understands. Okay, comment. Let me know if you understand about all the thing I have been talking. Okay, since everyone understand, there are one more question right here is what is the SOP for scalpings? Okay, SOP of scalping, you have to done all this first. Okay, you have to done all the steps that I said just now. You have to done all the steps that I said just now, and you can just monitor for the price actions. The same steps, but H4 M30 you change to M30 M5. Okay, you change to M30 M5. That one is for scalping. M30 M5. Okay, which is the zoning you use M30. The zoning, right? The zoning you use M30. The zoning you use M30. You have to know the direction first. Okay, you have to know the direction first. The direction first, and then zoning you choose M30, and the confirmation you choose M5. For right here, right? If you want to sell, you still remember why NFP we try to sell. Okay, this is our selling zone. Okay, that time is on the downtrends. Okay, that time is on the downtrends right here. We go to M5. Okay, you go to M5. You can see the price already closed in the zones. That's why I take the risk for the selling. Okay, this I think where we entry is exactly right here. Right here. Right, these deals. Just change the time frame we'll do on the scalpings. Okay, so I will explain on how can we manage the emotions and also for the money management. Okay, for example, I just give you the examples that the entries on the H1 setups, the M30 setups on last Friday. Okay, on last Friday, this is the one I'm trading. This is the one we entry, right? 24.5 until 27.5 right here. Okay, once we entry, after the confirmations, we entry for shorts. Okay, after the confirmation, probably around here. How can we control our risk? Okay, depends on the structures. Okay, depends on the structures. Okay, if you are still a new high, okay, still got the previous high right here, right? If still got the previous high here, I would say that I will just take around 20 pips. Okay, around 20 pips from 27.5, which is 29.5 or 30. Okay, I would say that I will just take this kind of risk because I know the volatility of gold. Okay, it also depends on the volatilities of specific pair you are trading. Okay, if you are trading for GBP pairs, okay, the stop loss, the floatings, okay, the floatings that you can allow is around 20 pips. Okay, gold is around 25 to 30 pips. If you're trading for Euro pair, they are 15 to 20 pips is enough. Other pairs I'm not used to it. Okay, you don't ask me how. All those like CAD, JPY, CHF, JPY, all those pairs I'm not familiar with. Okay, for Euro is 15 to 20. For GBP is 20 to 25. And for gold is 25 to 30 pips. Okay, right after your zone. Right after your zone, yeah, is calculate from your entries, entries or for the zone. It's better to you for you to get the SL 25 pips from distance from your zone. Okay, so for right here, I will take my SL just on this point. When my reward is where I would say is on the previous structures. Okay, on the previous structures. Okay, so that time when I'm selling right here, In here, that got the value, base value. There is a very base value in this area. Can you see? Is a value and a bearish candles and suddenly on the another value. Okay, so this is the very base value. So my sell is against the very base value and I have to exit before the very base value right here. You can take 19. Okay, you can take 19. This is exactly the same on the setups that are given on Friday. Okay, this is how you control the risk and rewards. The risk and reward. First, you have to identify of the volatility of the pair you are trading. Okay. Second, for the reward, you have to base on the structures. You base on structures or based on the setups also can. You have to exit your sell before the buy area reach. You have to exit your buy before the sell area reach. Okay, this all for risk and reward controls. Another thing you have to know on your money management. Okay, for money management, okay, I assume most of you guys have more than 100 USD. Okay, I just take 100 USD as examples. Okay, 100 USD actually, if you're using OctaFX, yeah, if you're using OctaFX, you should not be able to trade. Should not be able to use more than 0.12, I think, or 1 something like this. This is the maximum you can trade. Okay, this is the maximum you can trade. That's why I'm choosing Octa. Okay, it's got like not too big for the leverage 1:500. Okay, you can just use this one. But I would suggest that if for 0.01, you can maximum 3 layers for gold. Okay, and maximums 5 layers for currencies. Okay, so your total lot size won't be like affecting your margin. Okay, won't be affecting your margin. This is just for examples. Okay, so you can trade without emotion effects. Okay, without emotion effect. That's my suggestion on money and also risk management. Is there any more questions? Is there any more questions? We open for the Q&A sections. How about HF? It's the same. It's the same. It's the same. No, not depends on your leverage, but depend on your equity you have. HF got the biggest spread. For me, it's got the bigger spread, but Octa is still fine. What is the best time to trade? Depends on what the pair you want. Okay, if you are trading those Asia pair, the JPY pair, okay, you can trade on the morning. If you're trading Euro GBP, mostly at the London Open, which is Malaysian time 2 p.m., 3 p.m. is fine. If you are trading for gold or USD pair, you better to trade at night, which is the US Opens. Okay. So if as Malaysian, you have to declare tax as for trading. If you are earning a big amount, you have to declare. Can we have the recording after the class? Okay, I will try to look for the recording on Zoom. So first time using Zoom, so I will try to look for it. If got, then I share with you guys. Okay, just ready for tomorrow. I will share you the outlook tomorrow. Okay, so that's all for today, guys. Okay, see you soon. Bye-bye.